Record high levels of the Rand gold price have been a welcome boost for many gold mining companies. One such company has been Harmony Gold. Now, we've seen that particular company enjoy a 155% jump since the start of this year, albeit from a low base. Is this sustainable? Joining us to discuss the outlook for Harmony is the Finweek contributor, Moxima Gama. Moxima, lovely to have you, although you are there in Cape Town. Just getting back to the issue around what we've been seeing contributing to the rally of Harmony Gold, there must be a couple of factors. Can you maybe talk us through a couple?
Well, it's the gold price. Gold price, as everyone should know, at least fell. It plummeted to at least those 200 the levels that were in 2010, from levels that were reached at 2000. So the gold price is currently at a sale level, and like all sales, it does attract buying, and that's what we're seeing at this point. But if you have to put the economic aspect into it, it's driven by the Fed interest rate decision, and there's a lot of speculation and uncertainty, which is actually increasing demand, and as a safe haven, which is pretty funny because it has a negative correlation. But it just seems like this dovish move that the Fed has is befitting for gold price. But of course, if they then have to adopt an aggressive stance, then that could see commodity prices then plummet again, because it would be better for investors to invest in interest-bearing assets than in commodities.
Moxima, just looking at what the chief executive of Harmony has said, he said that high production has contributed to a stronger cash flow. But are the current production levels sustainable?
Okay, for them at this point it is sustainable because they were able to pay off some of their debt and to fund their big development projects. And the particular one he was speaking about was actually the one in New Guinea. Whether it's sustainable in the future, it's pretty much unknown, but there are other factors, and the reason why is because there are a lot of other factors that determine the success of mining companies, and some of them are beyond even the companies themselves have no control over. So it's usually just best for them to adopt a good recovery plan to hold their heads above water.
Obviously, we've been looking at where the currency is currently sitting, and I'm talking about our local unit. What happens when or if the Rand strengthens? I mean, what will happen to a company like Harmony Gold or gold producers for that matter?
Yeah, when it comes to the profits, the operating profits of the company, it also depends on how fast and how rapid the Rand appreciates. It will inevitably gnaw on those profits, although costs will remain constant. So I'd like to believe that at least management has factored that into in the future. But from years of analyzing gold, it's usually the share price is driven by sentiment, and sometimes not the financials themselves, because there's the gold, there's the commodity to put into aspect and economic recovery or decline. And if one of them, if sentiment is up and one of them seems to be doing well, then you'll find the gold price shooting up the roof. I mean, gold shares rather. But if all of them seem to plummet, then you'll find it also losing value. So it's best to just kind of follow the sentiment and see which one goes up. And in this case, it seems like this rise in gold and commodity prices seems to be pushing the gold price, well, Harmony and all the other gold stocks up.
Certainly, we did see that with Sibanye Gold yesterday rallying as much as 13%, and of course on the back of that gold price. Thank you so much. That was Finweek contributor Moxima Gama. Up next, let's have a look at this week's cover story.